Iyer too joins in to talk about his thoughts on the markets. Vivek, hi, afternoon. Let's begin firstly by your thoughts on pharmaceuticals because, as standalone and individual, the cases may be a niche, a pocket, but you are pretty much seeing a sector turnaround.
Yeah, it's been one of the easier sectors to pick in. I think it's been pretty hard to go wrong in the last 6 months. We have positions in various companies, and yeah, I think there's still some way to go in this cycle. So I think been easy to pick, and we continue to hold.
Coming in as far as pharma sector is concerned. But coming back to the discussion on Paytm, Vivek, do you track this one closely? And do you think this is one of those binary and turnaround candidates?
Yeah, I think this is one of those harder opportunities to capitalize on. Certainly not up my street. I think very nuanced and differentiated view to take a buy call on this. I think avoid is very, very easy, and the case there is very simple to be made. But to buy here, I think would require greater depth of study.
Yeah, absolutely. Aditya, have you been tracking Paytm though on the charts?
Is it for me, Aisha?
Yes.
Yes, I have been tracking the stock on the charts for some time now. The interesting thing is it's not for faint-hearted. We know that because stock tends to make upper circuit, lower circuit. But looks like now it's formed a base for itself, at least in the near term. 450 is a very good support area for the stock. I think stock on the upside can easily test levels of 570 to about 600. So if somebody has the risk appetite and can put some money at risk, Paytm can be your pick, definitely, because the risk to reward is in favor of going long in Paytm at current levels. Could be one of those like the Zomato kind of a move. Too early to say, but yes, at least we can see a bigger up move in Paytm coming through. This sustains.
Okay, high risk reward play, but the risk reward is at least balanced towards the gainers towards the gaining side versus the losing side. In terms of the other internals right now, it's the auto index which has managed to hit the mark of 26,000 for the first time ever. Of course, the record high level at that. What do you make of the construct in pharma, in autos, Vivek? CVs versus two-wheelers versus the SUVs, and of course new players which is going to hit the street in terms of Ola Electric, which is expected to happen over the course of next couple of weeks itself, and Hyundai later in the year.
Yeah, I think autos might be one of those cases where the best might be behind us. At least the industry level data is not as encouraging as it was 2 years ago, and it's we're starting to see a slowdown. And valuations now are, of course, much higher and priced to perfection, and that's been because of the stellar performance over the last 2 years. But I feel like there are much easier places to hunt in terms of the risk reward.
Vivek, is that your preference as well? That private banks are only going to last as long, and one can see that play out in the earnings as well, right? Be it Kotak or for that matter in HDFC Bank. In fact, the underperformance kicked off once HDFC Bank came out with its Q1 update. Do you sense a rotation now playing out, and a sustained one at that?
Yeah, at least for this quarter, it seems that we are in rotation mode. And I think when there are so many other sectors doing extremely well, I think of the companies above market capitalization of 1,000 crores, the results that have come out so far, more than 50% of them have reported earnings growth more than 10%. So it's been a great earnings season so far, hopefully going forward as well. So why not focus where the earnings are rolling in?
Okay, point taken. Thanks, Vivek, for making time and speaking with us today. Appreciate your time.
If you like this video, then like, share and subscribe to ET Now.